September 1st, 2023, I put out a video titled Nvidia Changes AI Tech Forever, H100 and Price Target. H100, that thing's an absolute dinosaur. Well, yes, it was 2 years ago. The aggressive price targets were basically spot on. And I thought that was pretty cool because at the time, you know, Nvidia wasn't as surefire a shot of a stock as it is today. Obviously, there was a lot of uncertainty at the time, especially about the rate of adoption of AI and data centers in particular. And so today, I want to go through another analysis similar to what I did 2 years ago that yielded such great results. And AI might be in a bubble, but I'm telling you right now, I don't think Nvidia is done yet. And we're going to go through that right now. Now, again, there's a few assumptions going into this, right? We've talked about this ad nauseum at this point in a bunch of videos, but AI spending is everything. If we don't have AI spending, then the whole economy suffers. Companies suffer, GDP suffer, and when companies and GDP suffers, people get fired, people don't have jobs, they don't have money to spend. You get the point. AI spending is everything, and that's the assumption we're gonna take moving forward. Could that change? Of course, yes. Whoa, you probably can't see or tell what companies we're gonna be talking about today, but in short, I want to cover some of the biggest and most impactful deals that Nvidia has right now with companies all over the space and what makes their growth story still ridiculously strong. First deal we're going to talk about is CoreWeave. I bet you couldn't tell from that very slight blur. Now, we all know CoreWeave has performed exceptionally well. What do? Well, essentially, their whole business model is buy the shit out of Nvidia chips. Every dollar that goes into this company is spent on buying more Nvidia chips to build out their data center compute. But the funny thing about CoreWeave is, I like how this analyst said it, CoreWeave exists because Nvidia wants it to exist. And I think you'll start to see a common trend throughout a lot of these deals. Without Nvidia, everything else fails. And especially for a company like CoreWeave that's modeled its entire business off of Nvidia. Basically, there's a bunch of data center companies, CoreWeave being one of the bigger players, that make all their business, all their money off of Nvidia chips. What makes this story so intriguing, this CoreWeave story, is that their customers, if you take a look here, Microsoft, OpenAI, Nvidia, and a bunch of other big tech companies, Meta is included in here. But yeah, the point is, all these companies engage constantly in these roundabout deals, right? They're all just tossing money at each other like it grows on a tree. And it does. With AI, it does. I think the most important part of this entire deal is how CoreWeave just absolutely finessed. First of all, they're ordering about $6 billion from Nvidia. But if some of this data center capacity doesn't get bought out by big tech, by whoever's interested, then Nvidia is obligated to purchase the residual unsold capacity. In other words, Nvidia is so confident that this demand will be there until April of 2032 that they're saying to CoreWeave, hey, you keep buying, we'll back you up, we'll give you some insurance. If you can't sell out, we'll sell you out. Now, you thought that was it? No, that's just the beginning. That's CoreWeave. That's one of the 4 deals we're going to be talking about. What about Oracle? Oracle, the company that came out of basically nowhere after this last earnings call. At that earnings call, they stated that their cloud infrastructure revenue, in other words, their business that solely relies on buying Nvidia chips and then selling that compute out through the cloud to the millions of unprofitable AI companies that are burning cash like firewood. Yeah, so they project basically a 14x from this year, $10.3 billion in fiscal 2025, to $144 billion in revenue by 2030. And think about it. If Oracle is bringing in $144 billion by the year of 2030 from their cloud infrastructure segment, how do you think they're going to generate all that revenue? That's right, through Nvidia chips. And we can clearly see that the trend in construction for data centers, again, we've already talked about this, but it's just important to point out that this is the case. And right now, the projections are showing it's going to continue to be the case. Whether you think it's a bubble or not, the money is there to back it up right now. Now, is that money legitimate? Is it just a big circle of spending? And who's actually going to profit from it? Well, we don't know that yet. But the point is, there's a lot of money right now to back it up. And what do you know? Full circle, Oracle to buy $40 billion worth of Nvidia AI chips. Honestly, pretty soft amount because we got an even bigger number coming. And another quick thing to point out is Project Stargate is now actually happening in two countries, Stargate Norway, Stargate United States. And Stargate in Norway is projected to need 100,000 Nvidia GPUs. The Stargate, the United States version of the Stargate, is going to have 64,000 Nvidia GPUs. Sounds like a lot of GPUs, but what does that mean for money? Well, I'm so glad you asked. Nvidia right now can sell their highest end chips anywhere between $60 and $70,000 per unit. Now, if we take the chips we just talked about, 100,000 in Norway, 64,000 in the United States, add those together, we have about 164,000 chips that we're talking about, just including Project Stargate. What does that equate to? Well, a lot of money, I can promise you that. 10.6 billion. And rest assured, for every dollar that these companies are spending on Nvidia chips, oh, don't you worry, they're going to spend just about another dollar on a variety of other things, to networking, to server rack infrastructure, whatever it is. Nvidia's going to hook them up end to end. And so you can pretty much double this number to 21.2 billion just from Project Stargate. And Jensen Huang loves to flex this. He loves to show this off. Nvidia is an AI factory company. So now you could really group CoreWeave and Oracle in this same boat, right? Both data center related plays. That's where all their money's coming from. Oracle obviously has a much more complex business than CoreWeave, albeit. And now we have Intel. What the hell is the Intel deal about? Now, I'm not so sure this Intel deal is a deal breaker or a game changer for Nvidia. But again, important to point out that they're really expanding their avenues, their ways of making money. Surprisingly, as you might have forgotten, Intel was actually one of the biggest and most dominant tech companies since, I don't know, 1990. But regardless, Nvidia wasn't happy enough with the 92% market share they have of the AI compute market right now, the chips used in AI specific data centers. So you know what they did? They said, hey, Intel, we'll throw you $5 billion. They purchased $5 billion worth of stock, which is absolute chump change for Jensen and Nvidia. And they said, we'll trade that chump change for you. We'll throw you a bone because you have 75% share of the global consumer PC processor market. You know, we're pretty good at that. We're pretty good with those processing chips ourselves. Maybe we could help you guys out. And so Nvidia expands its reign. Jensen Huang continues to be an absolute savage. The Jesus of AI strikes again. Now, let's be honest. We all knew it was coming. It was only a matter of time until this guy showed up, OpenAI, because at the end of the day, the foundation that this AI spending culture has been built on these two companies, really, Nvidia and OpenAI. OpenAI is promising a long-term profitable AI software product that's going to change lives, change business, change everything forever, right? And Nvidia is powering that foundation. Now, they're both so confident in that, these fellas right, holy shit, this is blurry. They believe in AI, the AI spending circle so much, they just inked a $100 billion deal. Nvidia is going to invest $100 billion, billies, 100 billies into OpenAI for OpenAI to build out their mega Project Stargate data center, right? And if you want to learn more about the deal and why specifically it's just ridiculously overpowered and broken for this economy, click here. It's an interesting one. But in summary, for every $10 billion that Nvidia gives to OpenAI, OpenAI is going to spend 30 to 40 billion dollars on Nvidia products. So what do you know? You have this circle where Nvidia invests 10 billion here and literally just makes back 2 to 3 times their investment immediately. With the total deal worth $100 billion spanning probably years, that's pretty much $350 billion in guaranteed revenue. That's absolutely insane. 3 times their current annual revenue. Again, is it highly questionable that we have a complete circular flow of money for a company that hasn't and won't turn a profit for some time? Spot on. I think all in all, the conclusion that we can reach is Nvidia, basically everything that they touch, Jensen Huang, the Jesus of AI, maybe more so the Midas of AI, everything turns to gold, right? And you can see, I mean, their investments totaling 1.8 billion from just a year ago are now worth something like 3.8 billion. Again, that's absolute chump change for Nvidia. Those billion-dollar investments literally mean nothing, especially considering what we just talked about with this OpenAI deal, probably totaling them $350 billion in revenue over the coming years. But yeah, they turn everything to gold. And finally, the big surprise, well, you expected it. Big tech, right? All the big tech companies are buying from Nvidia like no tomorrow, because at the end of the day, if you're not buying from Nvidia, well, then your AI data center, your AI capabilities are falling further and further behind. And if you don't have AI capabilities, what the hell are you doing? You're not going to be able to make money, because AI is the most profitable space to be in. Yeah, these four companies alone in Microsoft, Google, Amazon, Meta are forecasting nearly 400, $364 billion of capex into AI data center build out. They've spent more than 100 billion on data center projects in just the past 3 months. What do you think that's going to look like with time as these things really come up to scale? Now, it's funny, right? We're talking about a company that just had a fiscal year revenue of something like 130 to 131 billion. They're telling financial analysts now, don't even include China. We're talking about China, a country with what, 1.4 billion people, and a ton of smart people with innovative companies that are probably hopping on the AI bandwagon in some form or another. So, I mean, this is a big deal. And Nvidia just dedicated their production of some of these H20 AI chips that conform with Trump's new ban on chips to China. And so their margins just took a recent dip due to producing chips that now weren't and aren't going to be sold. Maybe this will change, who knows? The point is, the Nvidia-China relationship is a bit of a roller coaster right now. But for now, don't include China in your financial projections. And honestly, is that even really that big of a deal? Well, it is, because it's an extra at least $2 to $5 billion in AI chip sales. But let's be honest, they're gonna get these sales somewhere. Somebody's gonna buy them. Some shitty data center company is going to buy these chips. Whether they're profitable or not, it's going to happen, and it remains to be seen if these companies can eventually turn profitable in the coming years. And if there weren't any more reasons to be bullish about Nvidia and their current position, I'll give you one more. Is this really a big deal? No, not really. Nvidia announced at their last earnings event that they're going to be buying back $60 billion worth of stock. How does that help you as an investor? Well, let's see. There's 23 billion shares just about, and today's price is about $178 per share, so that comes out to about $4.2 trillion in float. And so this $60 billion is really not that much in the grand scheme of things. It makes up about 1.4% of all stock that's available to retail and private investors alike. Nvidia is going to reclaim 1.4% of their stock over time. And again, that's good. Rather than diluting their shares, they're actually creating more shareholder value. They're reducing the amount of shares that are on the market, and therefore the shares that are on the market should appreciate. Less supply and still incredible demand, obviously. Now, like I did in that video 2 years ago where we absolutely sniped the future price of Nvidia, let's look at a quick PEG ratio analysis. Simply put, it's the PE ratio over the expected earnings growth rate, usually averaged over the next 5 years. Now, why use this over something like, I don't know, the PE ratio? Well, PE ratio is garbage, at least for a high growth company. Of course, Nvidia is going to have a high price to earnings ratio. The company has been growing at what, 110% clip for 2 years? PEG ratio is a better way to show how much money investors are willing to pay for a company's future growth. Nvidia with a current PE ratio of something like 52 and an expected earnings growth rate over the coming years of about 22%. We're talking about a PEG that's greater than 2, which usually entails a pretty overvalued company. You see, that's what Wall Street projects. But we all saw what Nvidia price has done over the past few years. Wall Street grossly underestimated the value of Nvidia. If they can continue any sort of trend, even remotely close to this right here, 147% gain year over year, I promise you, you could be damn sure that these estimates right here, Wall Street's estimates, are again going to miss the mark. And let's be conservative. I'm not going to go Wall Street conservative, but I don't think 30, 40, I think 50 obviously is on the aggressive side, especially we're talking about a company with a market cap of 4 trillion plus. But I think a growth rate of 30 averaged over the next 5 years is attainable. We're talking about a PEG ratio of, this is 30 or 40 for that matter. We're talking about a sub 2 PEG ratio. Now, this is meaningless without some comps, right? And don't worry, I have some comps for you. We have Tesla, probably the highest PEG on the market, other than some of these AI data center companies and the AI software companies. But we have Tesla sitting at 14.7, AMD at 1.9, and Microsoft at 2.2. So I hope that gives you some perspective. Nvidia might be fairly valued right now. And I think a lot of people would be willing to pay fair value price if they happen to outperform. Again, we'll see a similar rally. Now, again, we didn't go into the financials, the fundamentals behind Nvidia too much here, but I've come to realize that just don't underestimate Jensen. Don't underestimate the AI Jesus at this point. He knows what he's doing. He has a crazy good pulse on the industry. And basically everything he touches turns to gold, at least for now. The question of, is AI in a bubble? Are these circular investments really sustainable? Those questions are all up in the air, and they should be. It's a questionable time. We live in a very strange era where you can spend infinite money and suffer essentially zero consequences, at least for now. Do you think that these deals in particular, and again, this is just a subset of the many deals and investments and headlines that Nvidia has been making over the last 2 years in particular, but do you think these deals alone justify a growth rate in the 30% average, 40% average, considering we've seen a greater than double over the past 2 years? Can big tech continually spend all their damn money on Nvidia chips? Everybody's sipping the Nvidia Kool-Aid, and the trend doesn't look like it's stopping anytime soon. I think their growth story is still underrated. Crazy, I know, but again, the stuff that we're looking at today, the OpenAI deal alone is so silly. Thanks for watching. If you got any value from this, if you believe in Jensen Huang as AI Jesus, subscribe to me. It helps me. Maybe I can afford some AI chips myself. I'm actually thinking about starting a data center company. I want to provide AI compute and shit like that to companies and friends. So help me out. Thanks for listening. See you in the next one. Bye-bye now. Bye-bye.